into this conversation, the stop of the day, if you will, could well be Titagarh Wagons, not in just in terms of price movement, but in terms of the order win that they have gotten. A consortium of Titagarh Wagons and BHEL has received an order to supply 80 Vande Bharat trains. The numbers are well known and they're on our trade setup as well. It's 120 crore per train for everything. That aside, remember last month, which is March, a consortium of Titagarh Wagons and Ramakrishna Forgings also received an order for wheels. Before that, Titagarh Wagons got yet another train order, if I'm not wrong. They're making it a habit of winning large orders in a fairly rapid clip. Let's get in Umesh Chowdhary to try and understand what's happening in this whole ecosystem and what kind of transformation, if you will, does he believe is in store for companies in this space and for Titagarh. Umesh, great having you. Thanks for joining in and congratulations on this order win.
Thank you very much. Always a pleasure being with you.
Thank you. So Umesh, actually, let's first start with this order win. Then I would want to move on to the other finer aspects. Tell us about this order win.
So this is a tender that was floated by the Indian Railways for 200 Vande Bharat trains, procurement and service of 200 Vande Bharat trains. The scope of the tender entails supply of these trains and 35-year maintenance of these trains, full maintenance of these trains. So it's a very interesting business opportunity for anybody and particularly for us. This tender was opened about 3 or 4 months ago, and we were L2. So being L2, we've got 40% of the tendered quantity, which is 80 trains, at the rate, as you said, of 120 crores, plus there is maintenance. So the total value of the contract works out to around 24,000 crores between us and BHEL. I mean, we are very extremely excited because, you know, this has been a kind of a target for us to get into the modern passenger trains. And Vande Bharat, as we all know, is the aspiration of the India of tomorrow. So to be a part of that aspiration of the future of India, it's not only an order win, but it's also a kind of a very big milestone in the life of any company, and especially a company like ours, which is very transformed from being only a wagon manufacturer to a rail systems provider and an integrator. And that's how, you know, we are changing our name. As you would have already seen, that we propose to change our name from Titagarh Wagons to Titagarh Rail Systems Limited. And that really is reflective of our strategy and our and the way we are already started to move.
Okay. So I'll take some time today, Umesh, because this has been the number of orders. I get confused at times as to whether I'm reading a previous announcement or a new one. So you received this large order, and congratulations on that. Last month, I believe you received that order for wheels manufacturing. I think for Titagarh Rail Systems, probably you're getting everything from a train to a wagon to a wheel, and which is great news. Just tell us, what are the nature of the order wins that you've done in the recent past? Also, by the way, I forgot to ask, what is your share in this consortium with BHEL? Because I believe this is not the only order that you've won in this consortium.
No, this is the only order that we have won in the consortium. So our share is about 52%. And 52. BHEL, BHEL will do all the propulsion, electronics, etc. We will do the train design, system integration, and the manufacture of the train. You know, while it's very very nice to hear that, you know, we are winning these large contracts, but it's not so many. Just 3 of them that we've kind of got. The first one was the wagon, of course, which was very important, which was last year, which is started. The execution has started, and then this wheel one, which is a very exciting piece, because we have an extremely good partner in both the cases. In one case, BHEL, and in the other case, Ramakrishna Forging. So if you really look at the synergy, you know, in both these tenders. So in the case of BHEL is a leader in electronics and propulsion. We are a leader in the train manufacture and system integration. So it's a very good combination. Second part of the nicety of this combination is that we were the only truly Indian consortium in this Atmanirbhar and Make in India tender for manufacturing Vande Bharats. Every other consortium that we were competing had a foreign company with it, we were the only consortium which was purely Indian. So, that was one of the very interesting consortiums and very interesting partnerships that we participated in. In terms of the wheel tender, the Ramakrishna Forging is a leader. It's kind of a no-brainer in terms of their expertise, their skill set, and their position in the forging business. We do not have expertise on the forging side, but we have expertise on the rail side. So again, it's a great combination, of two similar-sized companies. We are very, very proud and privileged to have a partner like them, because they are an extremely well-organized and professional company. So we kind of bring in our values together and create a larger value. So the whole idea of these synergies was that the sum of the whole should be greater than the parts, and that's exactly what we've been able to achieve.
What was the size of that order win? Have you been able to disclose that? Sorry if I missed it.
Yeah,
it's 15,40,000 wheels, I know, but in rupees?
So it was about 12,000 odd crores.
Okay, and there too you are roughly the same. I mean,
around equal.
Around equal. Okay, great. And okay, so now I know you're saying very modestly that it's not too many orders, but 3 orders alone, but it's 3 large orders. And relative to what's happened in that space, the size of the orders and the pace at which these orders have come to Titagarh Rail Systems is been pretty swift as opposed to being sporadic. How does this alter the nature of the work done at Titagarh in terms of capacities being set up, utilization levels, hiring, etc., and capabilities thereof, of course? And how does it alter how you execute over the period of the next 2, 3, 5, 10 years?
So, what we have always continued to do is that is build on our capabilities. So if you look at Titagarh Wagons of 2018, 4 years, 5 years ago, we were a 300 crore top line company on an annualized basis. Now, considering the December quarter results, we are a 3,000 crore top line company. We've kind of ramped up 10x in 4 or 5 years. So obviously, the initial part of the ramp up is always the most difficult, and that we've been able to overcome. So we are fairly confident that, from here, whether it is in terms of the freight rolling stock or in terms of the passenger rolling stock, the capacity that we are creating, the organizational bandwidth, the systems that we are creating, of course, a lot has to be done, but we are pretty much on track doing that. We believe, the past revenue that we have achieved in terms of what we got in December, also, if you see the product mix or the segment mix, bulk of it, maybe 80% of it is from the freight rolling stock. So that effectively automatically implies that the passenger rolling stock business is on the takeoff stage. So, it's only going to add on from there. So we are pretty, I would say, prepared in terms of our capacity building. We are working on improving the systems, improving the management bandwidth, improving all of that, that is required in order to scale up even further. But that's an ongoing process. That's not going to stop anytime,
Okay. Umesh, what's the nature of such large deal wins in terms of internal return metrics? I mean, does scale give the ability to get better margins and better return ratios, or does such a large order win mean that you're going for volumes even if it comes at the cost of margins? You've done circa 10-11% EBITDA, if I'm not wrong, and please correct me if I'm wrong. Does it stay the same? Does it improve, or does it come off a little bit?
So we've always given a kind of a guidance that we will do as a company. Our industry does a kind of a sustainable margin level is on 8 to 10% EBITDA sustainable margin. Now, when of course, if we kind of try to increase on the EBITDA margin and we start cherry picking the orders which are there, then we will have to compromise on the top line. But I always have believed that our kind of an industry, the bottom line follows the top line. It cannot be a very high margin business because then sooner than later you will become a inconsequential fringe player. So unless and until we can maintain the leadership, and now we are in the stage where we are not concentrating so much on improving this 8 to 10% margin. I'm not saying that that will not happen, but that is not our number one priority. Our number one priority is to grow the business. Once the business stabilizes, then your fixed cost amortization takes place over a larger volume and so on and so forth. And then the margin automatically will follow. So our focus is, while we don't want to compromise on this 8-10% kind of EBITDA margin level, we don't want to kind of start cherry picking orders and in the ambition of getting to a much higher level of margin, but continue to work on building up our efficiencies. So the margin will but only be an end result of all of this effort that we are putting in.
Do cash flows, working capital requirements, etc., change with size, with your ability to be able to bargain better, procure larger at a better cost, etc.? Does it happen? Does it start showing tangible results 1 year out, or does it take 2-3 years?
I would say it takes a couple of years in order to show the tangible, because, again, what happens is that, so let me just give you the example of what happened in the last 4 years. We had to, obviously, at the 300 crore turnover level, we had to create a fixed cost or a cost structure which was capable of doing 1,000 crores. At the 1,000 crore turnover level, we had to create a structure which was capable of doing the 3,000 crore annualized. So obviously, on that particular year, our costs would not get optimized at an optimized level. But over a period of time, obviously, when we are able to achieve that milestone, it does make an impact. So that's how we are continuously endeavoring to grow. As far as the cash flow is concerned, obviously, when with the growth in business, the working capital requirement grows up. But we are a very low debt company, so we are almost debt free, except for some working capital debt. On a net basis, we don't have much of a debt. So we don't see that as a big challenge. We'll be able to manage our working capital, but we are putting in a lot of focus to improve the turnaround cycle and that's how we will try to improve upon the net margin going forward.
So I guess even for any kind of potential capex that you might require in order to execute some of these large orders, an equity sale will not necessarily be an option, because you're comfortably geared up in terms of the gearing ratios to raise capital if need be.
So we don't have any immediate plans of raising equity at this point of time, but I don't want to kind of put the cart before the horse, because in the sense we are really at a stage where we are growing a lot. It's definitely a dream run in terms of what's happening with the country. Yes. I'm not talking about Titagarh. So we are basically just riding the wave. As Titagarh, the only thing we are making sure is that we don't get left out of the party. And India is in a on a roll. It's the country which is of the country of the future. So we are just making sure that we kind of tag along.
Okay. Last two questions, Umesh. One is, when I'd spoken to one of your peers who had also won an order last year for the wagons, right? There was a conversation that not only would companies in the rail space make wagons or equipment for India, but the size will give them opportunity to even have large export opportunities. Are those coming along already? Are you in conversations, or will these happen over a period of time, if at all you are going down that route?
Absolutely. So our ambition, and I think it's a very, very, very pertinent question. I'm glad you asked that, because this kind of helps me to articulate what is our vision of Titagarh.
That was going to be my last question, but you can answer both of them together.
Okay. So our vision of Titagarh is, if you look at India, we don't have a rolling stock Indian rolling railway multinational company. We don't have a brand which can really be called an Indian brand in the railway field. So India has all the capability, has all the ingredients, everything is there. I think it kind of lacked the support of this, which came from the Make in India and Atmanirbhar Bharat programs of the Honorable Prime Minister. And I really believe that for Indian industry, these two schemes or these two policies of the government, which is both Make in India and Atmanirbhar Bharat, are transformational. I don't think that ever any country, or at least India, in the independent India, has never come anywhere close to such policies to encourage domestic industry and domestic employment. And with the background of that, with the backdrop of this trust that the government has given to the industry, the idea is that why should Titagarh not be, and many Titagarhs, not only Titagarh, but many companies like Titagarh not be able to become Indian global players in the railway rolling stock market or in the railway systems market. And that is our target. That is how we are trying to kind of prepare ourselves. Of course, it's a journey. It's not going to happen overnight. But having the volumes that we have from Indian system now, if you look at any companies globally, I'm not going to name the companies, but take the top 20 companies globally in this field or any other field, they have grown or become global on the strength of the domestic base. In India, that was lacking. Now that has come in. So with the domestic base being there, it is only a matter of time, whether it happens 2 years before or 3 years later, but it is going to happen that Indian companies are going to get global and they are going to target the global market. So I don't know which peer you spoke to, but I think that there would be several peers in our industry that would and that should target to go global. And Titagarh would definitely be one of them.
Yeah. No, I've spoken to Texmaco. They won an order similar to your size a month after you guys did, and which is when we had a conversation with them. And they were saying that there is an opportunity to do that. I don't know which route they have taken, but they had mentioned the possibility of doing that. So my final question, Umesh, and that is around, so you explained the vision of becoming multinational. Would love to understand, and only what is declared. I mean, if you're not at a liberty to say, please don't. I'm just trying to understand. The mind boggles when you think of the kind of opportunities that a large railway ecosystem like India can throw up. If you add the global angle to it, that's, as they say, sone pe suhaga. Where do you go, or where do you envisage you can reach in terms of size from where you are right now, say 5 years out? Have you prepared some internal memo for your investors, stakeholders, shareholders, etc.?
So, of course, we have our dreams, we have our visions. I mean, I'm not fully at liberty to share all of that because, they are sensitive. But I can only say that the size of the pie globally is phenomenal. If you look at companies globally, and I'm not talking that we'll be able to get there immediately or in the near future or even in the immediate distant future. But if you look at companies that are there in this field, they are sitting on order books of some of them on 70 billion euro of order books, it's 50 billion euro of order books. So we are talking about a landscape which is extremely large. Now, where in that landscape can we kind of position ourselves? It's going to be a factor of many things, that will come together. But the first thing that needed to come, and that's what I am at liberty to kind of share with you, is that what I communicate with my team always is that the first limiting factor that companies have and what India had in the past was its own mindset. Indian Railway never thought that they could go to a 3,000 million ton of carrying of cargo carrying. We were talking about a 7%, the Hindu rate of growth kind of scenario. And we never thought of a quantum jump. We never thought that we used to always discuss that, it's like a student scoring 5 out of 100, saying that I've had 100% growth and they still get to 10 out of 100. But they never benchmarked it to the 100. And that's the potential that existed in India for the Indian Railway, for the Indian infrastructure and the Indian companies. So as far as we are concerned, the first barrier that we have been able to break and we are continuing to break is our mental barrier. In seeing that there is a large opportunity that exists, and in order to get even close to that large opportunity, even an iota of that large opportunity, there's a lot of road to be traveled, or I would rather say a lot of track to be traveled. That would be more apt for a company like us.
Well, I certainly wish you all the best for that. But I would love to end this conversation, sorry, Umesh, with just 1 minute question I forgot to ask you at the start itself. For order wins like these, like say, for example, the one that you've just received today, or the announcement has just come yesterday. Out of that perceived 9,600 crores, if my math is not completely off, how does it translate into numbers for you? For example, let's say you are 100% owner or the consortium partner. What comes up in, say, FY24? How does it come up? Can you give us that detail?
Sure. So the total contract is about 24,000 crores, including the maintenance part. The supply is about 10,000 crores, and the maintenance is the rest. As I said, that this contract comes with full maintenance.
Oh, I was under the impression that 9,600 crores includes maintenance. You are saying that's over and above.
Yeah. So the total contract is 24,000 crores.
Okay.
And out of this 24,000 crores, 9,600 or say 10,000 on a ballpark is supply, and the rest is the maintenance piece. The supply of the 80 trains will start in 2 years and will be over in 4.5 years thereafter. And then the maintenance continues.
Okay, over a period of 35 years. Great. Okay, thanks for those details. Congratulations once again. And we'll talk some numbers when you come out with your quarterly results, because it's best to do that. You must be in a silent period right now, so I won't push for that. But I wish you all the best for doing all of this and changing the landscape of Indian railways, because we would love to get back to trains in a meaningful way as opposed to just using planes for traveling through India. So thanks for doing that.
Thank you very much. We've not changed the landscape of the Indian railways. We are true to our name till now, are the wagons. So the locomotive is the government, and we've just kind of attached ourselves with the right locomotive. So,
most certainly. We wish you all the best for that as well. And thanks for joining in today, Umesh.
My pleasure.
And viewers, thanks for tuning in.